following is an excerpt from an askSlim premium level video. Follow us on YouTube, give us a thumbs up if you like this video, and do subscribe to this channel on YouTube. Share it. There's tons that come out every single week. Follow us on Twitter at askSlim, and write to Matt at askSlim.com for trial memberships. We have trial memberships available for all of our levels, 1, 2, 3, and 4. And go to the askSlim.com website for details. Thank you, and enjoy the video. So now we're going to look at the Treasuries. Yields right now have been moving up a little bit, Treasuries moving down a little bit, and I think that is the beginning of a trend. The trend being that this period of, I think, a month or more of the stock market being stable, in other words, not making a new low, not running away, making huge recoveries, but trading in a range, that's probably going to set up a more of a move out of the safety bids, and again, that would be a weak period for the dollar. It would be a weaker period for the bond market, as we have been projecting. So this decline likely coming into May. So I'm going to switch this over. We're going to look first at the 10-year yields because they cycle really well. And you can just see in this downward trend in here, there was a slight shift on that low. We have that marked in there on those, those dash cycle brackets. We hit a huge spike when the bond market collapsed for a couple of days. Right over here, you got up to 1.25 in yields from 0.4. Talk about a move. And now you could see them starting to move up a little bit again here as the bond market is softening, as the stock market is firming. We're going to look for yields in here at least up to 1% in this coming weeks. I had originally projected up to 1.42. We are lowering those projections now to about 1.20 in the coming weeks. So 1 to 120 is where we're expecting, and that is likely to be in May, which aligns with the low we're expecting in the Treasuries in May. So here you can see this right now entering into a period. This was the support zone, and now entering into this upside move here, which takes you out into sometime in May likely, and then the low in the Treasury futures coming at that time. So we're in a period of rising yields, declining Treasury market, I believe, and I've talked about that recently, that I thought that was going to happen. And it took a little while, but now it really looks like we've got a topping going on. Here you could see the I don't want the ZBs, but I'm going to stay on the ZBs. I'll go backwards, 30-year, 20-year, 10-year. How's that? You can see these rolling over. We have a target over here about 168 on the downside, 10 points into May as we get into that corrective nested period. And here you could see those upper sell zones backing off in there. Note, momentum is still strong right over here, and that the projection oscillator got oversold. That says you might try a little more on the upside in here, but then we think it will be moving down. You're going to have to lose this upward momentum to get that big decline that we're looking at towards this fib confluences, the target zone right over there. So you can see when we put this up on the daily charts now, we have added in the target zone that we have for this downward correction, and we'll see if our analysis gets us close to those levels on the downside in here. So we had a trading idea up of short the bond market, and it tickled out our price that we needed to look at that and pull it out, but we certainly need to put that back as a short idea. There you can see in there on the 10-year a very similar pattern in here. We're looking for a decline over here out into whoops, that's the monthly, sorry, there you go. A decline over here out into the May time frame, into those support confluences. The target here below 135.5, pretty good decline, 2.5 points in the ZNs during that time period. So we'll be looking for that decline. And here's the 20-year. Here I went way out of order today, but I know that you all know what you follow. So, and the same patterns in here. Our targets are either down to 157.30 or 152.20 on the downside there. That is a pretty big drop in there And that will make the TLT puts come to life. I've been in there trading those. Here you can see we're looking for this target over here. That's 157. This is 152.5 right there. So 157 is our highest downside objective. Now trading at 165, and again, pretty big trade. This will not happen until we lose the momentum that we have right in here. We almost did here. You see one little couple of days of neutral momentum. That's when it turns the volume bars gray right there, and now it turned to the upside again. So, but it gets up into the sell zone and then starts to roll over, and I think that that top is in, and that the yields will be moving up as we have this period of decline very likely ahead of us for about the next month. We'll call it 3 to 5 weeks of pretty downside, a serious downside risk in the bond market.